Alright traders, I am back again with another video, and this is going to be a quick video, but this is the euro pound. On the daily time frame, we're looking at a possible trading opportunity. I'm going to tell you a few things here about using Ichimoku, and I'm going to be using Heikin Ashi candles on this because I want to show you how to get a better trade entry by using the Heikin Ashi candles. One thing I'm looking at here is this euro pound trade. I'm looking to trade this to the upside. So I want to make my first target. It's going to be my target. I don't usually take, when I make a target, I don't say that I have to take profit there. It just is a level where I want to see if price is going to get through. So quite naturally, it's going to be your next support and resistance level. All right, so daily time frame here, you could see this Kijinsen here. We are right on the Kijinsen here. The Kijinsen is a point of market equilibrium. When we get to the Kijinsen, it's usually a sign of support, and you get bounces off of that level. Now, we had a TK crossover here that's bullish, which is good. And you want to trade in the direction of the crossover. Mostly every trade you want to take is going to be in the direction of the crossover. I'm looking for the market to bounce at this level. There's so much volatility, as you could see right here. The cloud is thicker. It's going to be a strong support and resistance area level when price is in that area, but what it tells you currently is that there's a lot of volatility in the market. So that may be an issue here for us, but we're going to look here at how to enter into this trade. And one thing that I'm seeing, if we violate this low here, then more than likely we may be seeing the market drop down to the downside here at 83.272. But currently we're sitting at support for the Kijinsen. Now this is a daily candle, so yes, it's starting to show support. You have a little bit of rejection here with the wicks here, so it's starting to show support. You have, if this candle closes here, you will be trading more than likely inside the body of this candle unless you get a bullish engulfing candle, and then you could trade to the upside, period. But we're going to look to trade off of the bounce of this level. Now sometimes it's hard to catch this trade because, you know, if you don't get a good price action setup here, and I have a bunch of price action setups that I like to look at here, so I want to see what price tells me, but I can go to a lower time frame. If I go to the lower time frame, you're going to be more confused because the lower time frame is going to tell me different than what the daily is telling me. So basically I want to stay right here and just look at this, and I'm going to show you how to enter this trade with the Heikin Ashi candles. But before I do that, I think we do need to go look at the 4 hour because it's going to be a good point of entry to show you how to get into the trade. So before we even go down to the 4 hour time frame, let's remove the Ichimoku system. Okay, remove it, because we already made our bias on the daily time frame, what we want to do and what we want to trade. So we know we want to trade this level. We're pretty much at this level. This is where we're sitting at. All right, so we know we want to trade that level. If we're going to trade that level, let's go to the 4 hour time frame. I took Ichimoku off so you don't get confused. All right, so what we're looking at here is a nice price action entry. You have rejection here, so you're pretty much rejecting this level. If you're rejecting this level, maybe we're going to see market move higher at this point. So what I want to see is the market move higher. Once you start making new highs, it's a good opportunity to get into a trade. Now this candle has 2 hours and 17 minutes before closing, but we made a new high higher than this previous rejection candle here, and if we close above that level, I'd like to enter the trade there, put a stop loss a little below this level, which is going to give you a good it's going to give you a good risk reward ratio. You're not going to be putting too much risk on the table taking this trade. Now we're going to go to back to the daily time frame, and I want to put Ichimoku on the chart. All right, and I want to show you with the Heikin Ashi candles because they're going to get you in a little later, and I'm going to show you what they do. I'm not going to go deep into detail about them because I'm not really discussing Heikin Ashi right now. I just want to go ahead and put the Ichimoku system back on the chart. So we have it back on the chart. Let me change the colors. That's not what I use. Hold on. Let me remove it and then put it back. It should have my default settings that I use. There we go. Okay, so what we're looking at here is everything is bullish because you got a TK crossover, that's bullish. You have that crossover right here. You got Chiku span above price, which is really good. When price is above the cloud and your Kumo twist is bullish, you got blue clouds. So when you got a blue cloud, that's a nice blue skies. Everything's fine to move to the upside. So sometimes it's hard to get a trade off of this level, but you could see this is a good level to trade off of. You could see from the downside, you bounce off of the bottom from the downside and trade to the downside. You could see a little bounce off the top here, but you could see really good Kijinsen bounce right here. Nice bounce here, but even better bounce. Here's a nice one here. All right, and you get bounces off of that level, but in a good trend, you're not going to be looking to come all the way back to Kijinsen. You're going to be looking to trade off of Tenkan-sen, not Kijinsen. All right, but the market's pulling back pretty good here, so we want to catch this trade if it's going to be a trade, because we're going to trade it at least to this level. So using Heikin Ashi candles get you in a little later, but I'm going to show you what to do when you're using those. So every time a Heikin Ashi candle opens, it's going to open at the midpoint of the previous candle. All right, so when we get, what I like to see is the market slow down here, because here's how it slows down. Each candle is going to open in the previous body of the previous candle. It's going to open the body of the previous candle. So if you go back, let's go back and look at some areas here. It's going to help you to understand a little bit what you want to see. This is a good example right here. So I told you each candle opens inside the middle of the body of the previous candle. So you have one, let's mark them out here. You have it there, the middle there, the middle there, now the middle there. But look at the difference here. Okay, so first of all, this body went outside of this body, and then this body went outside of this body, and then this body went outside of this body. All right, because you could see it broke the low of the body and closed below it. This candle here closed below the body of this one. This candle here closed below the body of this one. But then this candle opened in the middle here, but couldn't close below the body here. That's when you start getting really interested. All right, so what I'm telling you right now, do we have that situation yet? So where we are now, we don't have that yet, but maybe the next candle, right? So back to where I was talking about, back to here. So now what I want to see, we start seeing the candles get smaller first of all, and then they're inside of the body of the previous candle. Now this one made a little lower than the other candle, but this was such a small candle, but you didn't go below this level. All right, so that was a major thing. And then you had like a little doji here, but this main doji here, when you get this doji, and even when I get a doji like this, I put my entry above that level and I want to trade above that level. All right, so that's what I look for. So you get a nice here, trade above the level, because you got to bounce off of the Kijinsen here. So you could see you had a nice doji right here. This was a little harder to catch, you could see, because you had a couple dojis. But if you did what I told you as far as putting it above the previous high of that doji, so here was a nice big doji, and really price never really would have triggered you, because you look at this, you would have figured your entry could have been pretty much at this level, but I wouldn't have been trying to enter the market yet, not at this point. So I would have wanted to wait till the market gets closer to this level and gives me a bounce, or if I get a close above my Tenkan-sen here, then I'm going to look to enter. So I could have traded this a few ways. I could have put my entry here, but then, as I said, I want to make sure I'm bouncing off of this level, so I would have saw this doji here, and this is where you would have put your entry right here, and then the market would have triggered you in. Now if you didn't get a good doji, or you didn't get a good sign, you couldn't understand, well, you're inside of this zone here. You don't want to be inside this zone. So when you get outside of that zone, this zone right here, the Tenkan-sen Kijinsen zone, the blue and the green, when the market's in there, as it is here, we want to wait for it to come out of there. And when it closes above that level, or if we're going to the downside If it closes below, then we're going to take a trade. All right, in this case, it would have been a trade off of this level, and you would have traded here because you broke above your Tenkan-sen here, and that's what you would have been looking for, trade to the upside. Now, let's get back to our trade. I don't want to see price, if we ever could get there, I don't really want to see price close lower than this on the next candles. Now see, because sometime using regular candles we'll get in too early. You know, this Heikin Ashi is going to get you in when there's momentum to that upside or the downside. All right, you can see when the market's moving, how it's moving to the upside. And then finally you got a doji here. The market stopped and went back to the downside. You could trade off of that. Seeing that doji, you know you're going to get a reversal, boom. Now that doesn't mean that you're going to get a reversal all the time. That just means that there's a possible reversal here. But when you're trading, if you're trading, you want to make sure your doji, when you're trading to the upside, if you see that doji, then that's where you want to put your bring your stop loss up to that level, because that's where you're thinking the market's going to fall or stop at that point. So now we want to see a doji so we can see the market stop at this point where our support is, and then trade this to the upside. Now what I want to see, this is daily candles, so we're not ready yet. It looks like we're ready on the previous candles when you use regular candles, but I told you they get you in sometime too early and the market's not quite ready. So this will slow it down for you. You'll get a chance to get a bounce off of this level and possibly move to the upside. Now if we close below this level here, then I'm going to trade this to the downside here, but we're going to be above the cloud here. But also you can see the market starting to become sideways. So I have to look at the market also. I can't just say, well, this is Ichimoku, I'm going to do this, I'm going to do that. You have to pay attention to what the market is telling you. So here's what the market is telling me, that it's sideways. Ichimoku doesn't do great in a sideways moving market to start off with, right? Ichimoku is for a trending market. All right, so let me set that as my default. And then you could see we're sideways here. So we may see the market violate this point because we're so sideways, but we are moving again to the upside, it looks like. So it's really hard to tell here. You're breaking highs though, so this looks like just a pullback level, and then the market moves higher. All right, so that's what I'm going to be looking for on this trade. Now I'm going to wait for the next doji or the next candle to open and see if it opens. It could be a small candle like this opening inside of this candle but never going below this low here. And if it doesn't go below that low, it's starting to form a support level here, and then we could take the trade to the upside. If we make a new low body wise, I'm not talking about the wick, if we make a new low body wise, then we're going to probably see this move to the downside. So yes, the wick's important, but the body, the closes are important to me, where the body closes. If you're making new closes, lower closes, then that's going to be even more important than these wicks. These wicks kind of set the support and resistance level basically. The market knows where they are, so they come back and get you and then move to the upside. So you have to be careful there, because if you get in too early, the market does come back to these points here, and sometimes it comes right exactly there and then takes you out and goes up to the upside. So you want to be careful of that. These Heikin Ashi candles will get you in a little later than you want sometimes, depending on how much the momentum is moving. If there's not a lot of momentum, you get a nice little doji, then you could probably get in on a good side, and then you're going to trade up to this level. And if you do see a doji on the move up, when you get to this point, then that's probably where you want to take your target, your profit. All right, so that's what we're looking at with this trade. I think we're early yet. I don't think we need to be looking to get into this thing yet. Let me show you how it looks with the regular candles again. So regular candles, it's starting to look like we're starting to see some, maybe we're going to see some bulls coming into the market. So it's starting to look like it's ready. So what happens here is traders jump the gun. They get in here and start moving, trading this right off the bat, because they're seeing a little bit of green candles here, a little bit of bulls coming in the market. So they jump the gun, then the market moves a little lower. Next thing you know, the market's moving all the way down here. I can't tell you which way this trade is going to go at this time. I know what I look for, and we have to wait to get more confirmation. So we're going to get that confirmation. We can trade the confirmation with the regular candles, but I'm doing Heikin Ashi candles tonight because I want to show you how to use those to help you to get in a little bit safer, so you're not jumping the gun on these trades. All right, so that's what we see here. That's what I'm looking at, and that's going to be the trade, the euro pound daily time frame Kijinsen bounce. That's going to be it, guys. Hope you enjoyed that. Hope you learned something from that. Look for those kinds of trades. A lot of times you'll see those. Want to really talk next time, maybe talk about the Kijinsen, the Tenkan-sen trades, because Tenkan-sen is very important. But that's it, guys. You can visit me on my site, fxatOneglance.com. I also have a couple courses, Japanese trading courses as far as Ichimoku. I have a regular Ichimoku course, and I have my Ichimoku Advanced Japanese Techniques course, which is going to teach you how to trade beyond the signals that you see every day people talking about. There's different signals that we really don't even much talk about. There's different theories and philosophies that we don't even talk about with Ichimoku, such as the time analysis, wave analysis, and price analysis. Going to be the most important thing is time analysis, which we're trading a lot of right now in our chat room. So a lot of traders really enjoy it and love it. So that's one of the things you could check out. But just come to my site, check some things out, see what you like. And also keep checking out my YouTube videos. I'll keep posting them for you. All right, guys, have a great one. Hopefully this develops for us. Now, again, remember, don't jump that gun, because this may fall at this level. This level does hold a lot. You could see it kind of sets the standard for us. You can see you get some nice bounces off of it, but we want to confirm that bounce. So we don't want to just take that level. A lot of traders I see take these levels no matter what, and then they tell me that this trade doesn't work, and I tell you, well, yeah, it didn't work because you just took a level. You traded a level. You didn't trade price. You need to trade price, not the level. Yes, the level is where you're looking for something to happen with price. So now you're looking for price to show you what's going to happen next. And sometimes price is hard to read or hard to tell what it's doing in the market, but you definitely don't want to just trade a level and say, I'm going to trade this level and that's it. You need some kind of confirmation as far as what price is telling you. Are there any bulls in the market, or are they all bears? I mean, why do you want to go long on the market if it's all bulls, all bears in the market? If there's all bears in the market, why would you be one of the few bulls in the market? So I didn't want to mess you up there, but I said if there's all bears in the market, why do you want to be one of the few bulls in the market? All right, trade with the crowd, and when the big crowd takes over, that's when you're going to be in the trade, and Heikin Ashi is going to help you. All right, hopefully that helps you guys. Have a great one. Till next time, God bless. So long.